Welcome to this explainer. Today, we're diving into something really fascinating, the hidden hardware side of the AI revolution. You know, every single time you use an AI tool, it's relying on these absolutely massive data centers. And sure, everyone talks about the chips inside them, right? But what about the actual physical infrastructure required to make all those chips talk to each other? Well, that brings us to Coherent Corp. They're a photonics giant, and they are secretly powering the AI boom. We're going to break down their technology, their financials, and the very real physical limits of AI scale-up.
To set the stage here, I want you to listen to this striking quote from Big Picture Investing. They said, "Indium phosphide lasers are the new oil. Coherent is making a massive bet on physics." That really hooks you, doesn't it? I mean, we hear all the time about data being the new oil, or even GPUs being the new oil. But this frames Coherent's optical technology as the absolutely essential commodity for next-generation tech. If they're right, they're literally holding the keys to the future.
So let's get into it. Section 1. The AI physics bottleneck. The fundamental problem the industry is facing right now is that as AI models get larger, data centers are hitting extreme limits. You simply cannot cheat heat and electrical resistance forever. Inside traditional server racks, data is moved around using electrical networks over copper cables. But as speeds push past 800 gigabits per second and start creeping toward 1.6 terabits, copper generates massive amounts of heat and resistance. It becomes a hard physical bottleneck. It drains power, it requires intensive cooling. Well, actually, scratch that. It requires insane amounts of cooling. Eventually, the traditional electrical scale-up architecture just fails to keep pace with what AI demands.
Which brings us to Section 2, Coherent's photonic solution.
Coherent is solving this exact physics problem by shifting those scale-up architectures entirely away from electrical constraints. Let's quickly demystify a couple of terms here. Optical circuit switches, or OCS, and indium phosphide lasers. Basically, they utilize light to transmit data instead of electricity. This dramatically reduces heat and power consumption compared to copper. But what gives Coherent an immense advantage here is their rapid conversion to 6-inch indium phosphide wafers. By vertically integrating and manufacturing at this larger 6-inch scale, they're unlocking cost and yield benefits that competitors simply cannot match right now. They are effectively alleviating critical laser component constraints in the entire AI supply chain.
And it's not just lasers. They recently announced major advancements in silicon carbide, or SiC, thick epitaxy capabilities. Think of this as a highly precise way of layering crystal materials to build better semiconductors. Compared to traditional silicon, their SiC technology enables high-voltage applications up to an incredible 10 kV. So what does that mean for you and me? It means far better power conversion efficiency, which directly lowers those massive data center operating and cooling costs we just talked about. It's a real game changer.
Okay, let's shift gears a bit. Section 3, a string of earnings beats. Now, holding the keys to the AI bottleneck means absolutely nothing if it doesn't translate into real-world business momentum. But just look at this track record of sequential revenue leaps. In Q1 of fiscal year 2026, they hit $1.6 billion. By Q2, that jumped up to $1.69 billion. And in their most recent Q3 report, revenue surged again to $1.81 billion. That represents an impressive 21% year-over-year growth. And honestly, if you look at it on a pro forma basis, meaning we adjust the numbers to exclude an aerospace and defense business they recently sold, organic growth is actually running at 27%.
And we are just taking management's word for it here. We can see it right in the actual reported SEC data. This condensed consolidated statement of earnings completely validates their financial momentum. The demand for optical technology isn't just theoretical, it's translating directly into hard net earnings, and they are significantly beating Wall Street's consensus estimates quarter after quarter.
But perhaps even more importantly, take a look at the margin expansions on this table. Q3 GAAP gross margin expanded by 243 basis points year-over-year to 37.7%, and their non-GAAP gross margin reached nearly 40%. This is happening because their product mix is shifting toward higher-margin, higher-value systems. Hyperscalers desperately need next-generation 800G and 1.6T transceivers to handle these crazy AI workloads, right? So Coherent can command premium pricing, giving their overall profitability a massive boost.
Moving on to Section 4. Scaling up manufacturing.
To sustain all this growth, they need scale, and Coherent is out there actively building what I'd call a manufacturing fortress to meet this massive, locked-in demand. Management has this intense operational focus right now. They're aggressively ramping up capital investments to convert a multi-year record backlog into actual shipments. You can see it clear as day in the data center and communications segment, where revenue alone has surged to $1.4 billion. They're leaning hard into that 6-inch wafer conversion and expanding early engagements in co-packaged optics, or CPO, which ensures they capture value even beyond the traditional pluggable transceivers.
All of this capacity expansion allows them to issue highly bullish guidance. For Q4, they expect revenue between $1.91 billion and $2.05 billion. This upgraded guidance reflects management's deep, confident visibility into the ongoing AI data center buildout. They know for a fact the demand is there. Now it's purely a game of manufacturing execution to actually fulfill it.
But let's pause for a second. Section 5, Valuation and Market Risks.
Because no investment is without a bear case, and as focused learners, we have to look at the full picture. 301.6, that was Coherent's price-to-earnings ratio at the time of these reports. Let that act as a visual speed bump to the hype for a moment. When a stock trades at over 300 times its earnings, it means the market has already priced in a vast amount of future perfection. With an elevated multiple like that, expectations are just sky high for a company sitting at a $57 billion market cap. And adding a bit of caution to the mix, we've also seen about $4.9 million in insider selling over the past 3 months. The harsh reality here is that when you're priced for absolute perfection, any slight misstep, maybe a delay in that 6-inch wafer ramp, a hiccup in scaling the optical circuit switches, or some unexpected yield issue, that could severely punish the stock and trigger a pretty aggressive sell-off.
Which leaves us with this final provocative question to consider. Is a 300+ PE ratio justified when a company genuinely holds the physical solutions to the AI bottleneck? It's the ultimate tug of war, isn't it? Between an undeniable, vertically integrated technological moat on one side and a sky-high valuation on the other. Coherent is undoubtedly at the heart of the AI hardware revolution, literally replacing heat and resistance with the pure speed of light. But whether that price tag makes sense for you, well, that's for you to decide. Thanks so much for joining this explainer, and keep questioning the tech that powers our world.